What a massive session to start off this week, right? You know, we got this right here is a very good learning experience on extremely high quality, higher time frame support areas. Okay, massive buyers stepped in exactly where they needed to. Okay, so I'm going to be going over Monday's session based on what I had written down yesterday, how that played out, and then I'll briefly touch up what we're looking at into Tuesday, and maybe that sticks for the rest of this week. So let's get into it. Now, I think one of the most important areas to understand heading into Sunday was this 15-minute time frame range from 65.87 up to 66.48. Okay, and what makes this area important to us is that we lost Thursday's low, which was 66.11. It pushed us down to a low of 65.87. The market attempted to reclaim back over 66.11, but we got rejected here. And then 65.87 then served as a short trigger, setting off continuation onto the downside. And the most important thing to understand on that is that 65.87 was the most recent pivot that triggered a sell. Okay, and this triggered a sell straight down into 65.25, which is a weekly support pivot. Okay, and touching it Friday session, the market touched it and instantly went for a retest at 65.87. So this made 65.87 a huge level entering Sunday and awaiting the open. Okay, and the plan I laid out was covering potentially two scenarios. Okay, and scenario number one would be if we gap or push above 65.87, that would be the level to watch, to consider a long entry, to see if the market can reclaim this previous breakdown level, hold, and offer long opportunities. The second scenario was opening under 65.87. Okay, and opening up under 65.87 would keep the market trading from point A up here into point B. And in that scenario, okay, as I mentioned, under 65.87, it's best to be cautious with longs, as this can put 65.25 back into play. This is our main support area into this week. Getting back into this area, there's nothing to do but monitor for a failed breakdown to consider long. Okay, this means that if sellers look under this area, fail to hold the market underneath, reclaiming back over is the long entry to stock. Okay, so immediately we gap down. Okay, and the market immediately went for a push, breaking 65.25. Instantly met with buyers that set up a trap that offered the first opportunity, and longs worked for a couple points. Okay, after that, the market attempted to consolidate above 65.25. However, buyers failed to hold, and this sunk the market inside of our buy zone. And getting in our buy zone, sellers are put in position to find any further momentum. They gotta break this zone down. Okay, and this failure of breaking the zone down, just lined up with a massive green candle straight out of our buy zone. All right, so that was the main setup into Monday's session. Okay, That was the biggest thing to understand, the importance of 65.25. All right, and when we flip to the 1 hour time frame, okay, when we flip to the 1 hour time frame, sellers broke under 65.25 on that second attempt, failed. And of course, news obviously helped push us out of that zone. And most importantly, it pushed us also back inside of the most recent 1 hour range that we lost, that the market broke down, okay, from Friday. Okay, I'm above 66.11. The market went straight to test 66.92. And above 66.92, the market didn't stop and went further up, testing the next overhead breakdown range, where without a doubt was met with selling pressure, knocking us back under 66.92. And then the market remained above 66.11 for the rest of the session. I mentioned that this area would be our support. Way before, when we were up here, I mentioned 66.11 is our support. Market has come down so far, holding well above this area. And that's what we want to continue to see into Tuesday's session. Hey, into the rest of this week too, if bulls remain strong. All right, so great, absolutely great setup. When we flip to the daily time frame, okay, how do we get to 65.25? Okay, well, we lost on March 9th. We lost the February low. It was a Sunday. We gapped down, and this set up the market to expand lower into November's low. And this was the first time we tested. We were long at this area. Okay, we tested this area, immediately pushed back over February's low, and buyers failed to maintain above February's low, which eventually set up a breakdown of November's low last week, okay, which was Friday's session. Breaking under November's low, all it did was expand the market to a extremely huge weekly pivots, okay. And if we flip to the daily time frame right here, the biggest time frame, this is where I'm pulling 65.25 from. Okay, so it has been a huge level on the downside. Okay, and I'm pulling up Discord right now just to show you the importance of this. Let me see. Okay, so right here, so dating back to February 5th. All right, so little over a month ago. Okay, we knew the market was stuck in a range from January's high down into November's low. Okay, at that time, we were on a different contract. That number was 67.71. All right, and what we had set down was, on a long-term perspective, was if we do lose, well, November's low, December's low, and November's low, December's and November's low, the worst case scenario is set on looking for the weekly support at 65.25. That would be an absolute gift. Okay, so yeah, we were set on, if the market were to break down, this would put us into a higher time frame lower pivot, which is the weekly, and we had set down 65.25. Okay, and breaking under November's low, which we just went through on the daily time frame, only set up the market to test 65.25, which is serving as a weekly lower pivot. And the markets, when we're looking at the market from the weekly time frame, what we know on the weekly time frame is that the market is stuck in a wider range, which is set from 65.25 and 270.43. Okay, and as the market's coming down, the market's touching 65.25. This is what we know. It's the lower end of the range for sellers to trigger any further downside momentum, need to break the market out and down out of this range. That sets off a breakdown trade. The thing about breakdown trades is they are very high risk, lower probability type of trades. The market, as we see daily, will test a support level anywhere from 5 to 10, maybe even more times than that. And if the level will fail, it's gonna fail after 5, 10 plus tries. So that's what makes it a lower probability type trades. I don't chase those type of trades, not for me. Okay, but what I'm trying to get to is, reaching into 65.25, sellers are put in a breakdown position. And what we saw so far on Sunday overnight was sellers spiked under this range and were immediately met with buying pressure, with buyers stepping in and pushing the market back over 65.25. So what does that tell us? Right? As of right now, what that tells us is that we know the market on a weekly perspective is stuck inside of this range. Okay? We also know that sellers attempted to look below this range and immediately failed. And number 3, from that failure, the market has pushed back inside of the range, and as of now, the market remains in a consolidation mode or in a sideways movement on this weekly time frame. There's nothing difficult to understand about that. Very simple. Okay, and as long as the market remains inside of this range, it's possible that we can just ping pong to the highs, ping pong to the boom, 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 boom. That's all it is. Okay, obviously this is a huge time frame, and it's going to take time to play out. Time to play out compared to, when we flip to the 15-minute time frame. What did we do right here all day? Within this range, just ping pong. The only difference is that this is a 15-minute time frame, and these candles are going to move much faster than, a weekly candle, even a 4-hour candle, a 1-hour candle. Okay, it's the same technical analysis applies, just a bigger time frame. That's something you have to keep in mind. All right, so into the rest of this month and into the rest of, and heading into April, what I'm advising, traders to look at is to see if the market can maintain above 65.25. And in doing so, all the market's gonna potentially do is just be in a consolidation mode. Okay, from losing February's low, okay, the market failed to hold above November's low, and all it did was expand us lower into the lower end of the weekly range. Okay, we've just been expanding our range, and now we finally came to the lowest end of it. Okay, so as I just mentioned a couple minutes ago, if we can maintain above 65.25, we know that all the market did was make a full round trip back into the lower end of the weekly pivot area. And as long as we maintain above here, the weekly time frame is in a consolidation mode. And this is the biggest time frame for us. Okay? So the only time I would be cautious is when we get under this range. Getting under this range is we have a huge level at 61.66. All right? So that's what we're going to keep watching for the rest of this month, heading into April, is that we can just maintain inside of this range. Okay? If we flip to the 1 hour, okay, let's see real quick. All right. Whoa. All right. Where are we? Yeah, look at all these zones. So 64.75, 65.25 is not an area where I pulled, out of my rear end. Okay, it has been a buy zone for a long time. We had a pivot at 65.14. We lost it. The market came back, consolidated in this area. We broke out of it. Okay, and now it's serving as a buy zone. Okay, so we're combining that weekly lower pivots with the lower time frame pivots. All right, so heading into Tuesday, what the newsletter has been sent out since 1 p.m. What we're looking at is, from the failed breakdown at 65.25 and moving back over, right here. All right. It moved us back over 66.11, which on the 1 hour time frame, this is the most recent breakdown level. Okay, so heading into Tuesday, we want to maintain above this area. This is our support. If we can maintain above here, the outlook that I'm holding is that we're potentially looking for the market to trade inside of 66.11 and into Monday's high at 67.48. So as I mentioned and advised earlier, longs at this area is what we're looking for. Now, if we come back to test this area, if the sellers break down this area, we want to see buyers immediately step in, pushing the market back above 66.11. That shows us, just like how we saw in the weekly time frame, that shows us that the market is accepting this range, and that's a scenario that I would consider long. All right, so the only moments I would be super cautious with longs is if the market loses 66.11. Gotta be cautious because this puts our support area back into play, and underneath 66.11, I'm not really interested on anything, and I'll just reassess at this area once again. Okay, let me see. What did I do? Okay, let me hop back to the 15-minute, show you a good visual. All right, so yeah, we know we want to hold above 66.11, 66.16. If we lose this area and the market cannot reclaim and fails to reclaim, and if let's say we see a scenario lower, this is an area that I'm looking at. Of course, I do have 65.42. This is the most recent trigger that was broken. Okay, but this is our buy zone. Any dips into the zone, we want to see them immediately bought and back over 65.25. That continues to be a good setup. Okay, if the market dips under 65.25 and goes directly to test, 64.75, there's nothing to do but monitor for a failed breakdown right there. All right, so yeah, that's what's we're looking at, little brief overview what we're looking at heading to Tuesday. As of right now, our bullish pivot has been compressing. Boom. So right now it has compressed down to 64.74. So if you can just see the market consolidate within here, that's a good sign to see, because it shows us that buyers are maintaining the strength that we saw after picking up demand right here. Okay, so as long as the market can maintain above here, bulls are in control. Avoid longs underneath here. We lose this area, reassess here. If the market breaks and then recovers this area, you know what to do. All right, breaking above 66.74 triggers a run to retest a Monday's high, and right above it, got to be careful, is this seller's territory. Okay, this is the area that got the sell started on Wednesday. If you guys recall, the market was consolidating in this, and we lost 67.64. All right, that's what got the thing started. So that's what we're looking at into this week, or at least into Tuesday. Okay, one session at a time. All right, but I think the most important thing to be aware of is to see if the market can maintain on this bigger time frame above and inside of this range. In doing so, remember, the market's just consolidating. Okay, there's nothing difficult to understand about that, and it's simple, as it should be. All right, so this is what we're looking at on bigger time frames. All right, ignore the noise, ignore it, because the market does at such important areas. Okay, so let's see what we got heading into Tuesday's session. Watch that 66.16, 66.11. All right, above 66.74. Remember, we're looking for a run to Monday's high.